Welcome back to the Humble Market Timer YouTube channel. If you enjoy the content, please like, comment, and subscribe. Now, based on what I have named this channel, it should be no surprise that I'm a believer that you can actually time the market. You can actually determine, based on how the market is moving and what is going on in the world, what your entry and exit point should be for when you should buy a stock. Now, I have seen countless videos and experts say that you shouldn't worry about timing the market. It's too difficult. You don't have enough experience. It's just a waste of time. But I never subscribed to that because I found that there were too many investors and traders and people who truly understand how the market works. They were able to get in and out of particular securities, commodities. Right at the bottom, they were able to buy, and at the top, they were able to sell. And I knew there was a method to the madness. So I've been trading and investing for over 20 years, and recently it sort of hit me what you need to do to be able to figure out when you should buy and when you should sell. And in this video, I'm going to share with you what some of those things are. And hopefully you can take the information and use it for yourself, or maybe do some further research. Just to add one more thing, this is not investment advice or financial advice. These are just my sole ideas and thoughts. Check my full disclaimer in the description. I first want to look at the SPY, and the SPY is basically a chart of the S&P 500, and it gives you a conglomerate of a bunch of companies all within one ETF, and it gives you a good, strong indicator of the overall market and when things are going up versus when things are going down. And I took the monthly chart because, again, what I have learned over the years is that if you look at a chart long term, over an extended period of time, it is amazing the story it tells, and it's amazing at how clear you can see entry and exit points when, again, you have expanded it out over an extended period of time. So I have the SPY set up on a monthly chart, and this is over 25 years, basically starting in 2000. And just looking at it, and I've talked about this in other stocks like Microsoft and some of my other videos because the charts are very similar. Look at the orderly nature in which this stock has traded. Once you are able to create the parallels for in which the stock has traded over that extended period of time, look at how it has stayed within the range, whether it has been in the midpoint area of that range. Look how tightly it traded in this time frame from 2002 to approximately 2008, which is almost 6 years. Look at how it traded along that midpoint line. We're talking for 6 years. It traded steadily in that range. And then all of a sudden it fell out of that range. And based on the parallel, you knew exactly where the bottom would be because parallels are so strong and they're such a powerful tool. And because the stock market is based on emotion and computers, things tend to bottom at key levels that you can see when you look at things over a long period of time. So it, as I mentioned before, it traded in that midpoint range. It fell to the bottom. It found the bottom, trended. Then it worked its way back up to the midpoint line. And then this happened back in 2020. Pandemic hit. Stock market crashed. And so back when that happened, people were saying to themselves, because the stock market was crashing at that time, where's the bottom? Lo and behold, if you understood about parallels in charts, look where it bottomed, right at the lower boundary of that main parallel. And from that point, the stock grinded up through the midpoint, back up to the top of the trend line. And what did it do? It rejected it, sold back down to the midpoint line. Again, it doesn't take an experienced eye to look at this chart and see where you could have gotten entries and exits at key levels where you could truly have maximized your gains. It just required a little bit of knowledge and technical understanding of how charts work, understanding parallels, and understanding that that is just one piece of the puzzle. The second piece of the puzzle is understanding price action and when there's capitulation in the price action. Capitulation is just when there is a drastic change in the price movement in a short period of time, when the VIX or the volatility index spikes. When you have volatility spiking, price dropping significant amounts of dollars in a short period, in a very quick time frame, you often see that capitulation occur at the bottom of parallels. When we had that pandemic fall, right at the bottom of the parallel, that was when we had the big increase in volatility and the massive drop in price. Oftentimes, those things will coincide. And then you have a third aspect to go with not only the technicals, but when you have price capitulation, at that point, you also start to look for policy change, key news, things that can change the overall scope of the market, that will all of a sudden change from things being dire and desperate and despair to where there's hope and promise. So right at that time, when at the pandemic bottom, where we had extreme price capitulation, that was also the point where the Fed came out and said, we're going to infuse the economy with liquidity. We're going to create economic stimulus by just loading the economy with money. And at that point, we had a change in policy, and the economy took that information and they found that bottom, and then we were able to ride our way back up. But that bottom coincided with not only what the chart showed, but the news that came in, and then that extreme price capitulation. And when those three things combine, that's when you know you have found a bottom. Now, it's harder to find the top, but it's always safest to sell when you hit at the top of that major parallel. And I always wondered how guys like Warren Buffett, he was always able to start saving money or cashing out on some of his equities to hoard cash. And he always was able to anticipate when there was going to be a crash in the market. He always seemed to get out near the top. If you notice, we had the last hit at this major parallel occurred in 2024. I'm sorry, 2024. That also happened to be the time when Warren Buffett started to sell equities to generate cash. Because once pricing hit the top of that parallel, he was satisfied. He's like, okay, it may go higher and I may miss some upside, but he also understands how market work. And he understands that markets don't go straight up. Typically, when you have a major rise, there's typically a dramatic fall to complement it, to get things back to a general, more steady move higher. So he started pretty much selling equities to have cash on hand for when we have the next crash, because he knows at some point it's coming. So he has now accumulated $300 billion of cash that he just has sitting on the sidelines, because he started selling things once we hit that upper band of this main trend line. And he was able he didn't start selling at the top, because things did go a little bit higher than that original main uptrend of this main band of the parallel. But he understands that there will be opportunity in the very near future to capitalize on when the market pulls back. Now, I mentioned this big parallel that we have in the SPY. Again, this is a picture of the SPY. But I want you to also notice there's been another parallel within the big parallel that has caused an even more of a parabolic move in the SPY. That parallel is another thing that you should look at, because that represents when things will have those areas where it comes back and it checks to see if we'll have a bottom in that area as well. So right now we're in the environment where we have all these tariffs, and Trump has said that he's going to put tariffs on all these companies. And right now we don't know what those tariffs are going to mean for our economy. And so as a result of that uncertainty, the stock market has all of a sudden started to pull back after a very parabolic rise, as you see here. And I drew these arrows here because these arrows represent areas where you can expect price to pull back to, and where you can keep an eye on to see if we have that major price capitulation along with that key news to show a change in policy, so where we can understand potentially where the next bottom will be. So this first arrow is at the top part of the main parallel, because we tend to, when we break a parallel, we tend to check back at the parallel. We check back at the top part of that parallel. Initially, that parallel acts as resistance. Once it breaks and comes back to check it, it acts as support. So initially we have resistance. It broke the resistance, but when it comes back, it now becomes support. If it breaks support, then we know things haven't really changed, and then we look for the next level. The next level would be at this next arrow, and that would represent the bottom of this parallel within the parallel. Now, even though this is a parallel within a parallel, I am initially of the belief that when we truly have a bottom, it won't really lie on or rely on this smaller parallel inside the main parallel. I think more so the key levels will be within the large parallel. So if this area doesn't hold, and this is just to kind of give you some price points, the first parallel, the first part of the top parallel will be at around the 530, 525 area. I think that's possibly the next area we'll go to with this drop in the market. And we'll see if we can get some support there, or if things can change. If there is nothing that changes, I do believe we will go lower and below through that area and land our way to the bottom of this parallel, within the parallel. If that area is in about the 480, 490 range of the SPY, I think there'll be some support there. Some people will initially think that that's the bottom. It very well may be, and we could bounce here and start trending higher. But if we don't get that major price capitulation along with that news event that shows that we're no longer in an area where things are unsure, or we don't know how things are going to go in the future with the economy, then I think we'll go even lower than that. And a more realistic target, in my opinion, and now granted, this would cause a great fall to get here, but to me, it will be this midpoint of this main parallel. I think at some point we will check back to this midpoint of the main parallel. And then if things are really, 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 really bad, if we have some war, or things just don't get better, or we have some retaliation that causes the economy to come to a halt, or we have a major recession, then it's likely that we could head all the way back down to the lower portion of this main trend line, this main parallel. And I think, just again to draw a picture, again on this channel I talk a lot about symmetry. I think you will see that potentially this action here could be duplicated on the other side coming down. So it wouldn't surprise me if we had some action where we went down to this midpoint line, then we got somewhat of a rally, and then we came back down to the lower portion of the main trend line to show that symmetry on this side going up, having that similar symmetry of this side coming down. Not to say that's exactly what's going to happen, because we don't know. We can't be mind readers. But what we can do is mark our levels, and then when we hit those levels, see if we get that news and that price action that will dictate to us, okay, we are now at a bottom, it's time to buy. And at that point, you'll find that you'll be able to maximize your profits and not just worry about dollar cost averaging. And again, to always be safe, you should never put your money in at one point in time. You should always scale in. But you always want to try to pick times in the market where when you do buy, you're buying at lows and not at highs, because you never know how long it will take to get back to these highs. Sometimes it's quick. Sometimes it's intermediate period of time. Sometimes it never goes back to the highs. Sometimes it takes 20, 30 years. So it's always best if you have an idea of when you can get into certain stocks and you understand what the great investors, I think, have understood, and that is you look at the time frame over a long period of time, you wait for price capitulation, and then you wait for the news that will cause there to be sea change and there to be all of a sudden a switch in what's going on that initially caused the drop. When you combine those three factors, you can find the bottom as well, and you too can time the market. Hope you liked the video. If you like it, don't forget to like, comment, and subscribe. Hope you have a good one. Have a good day.